The morning of panic. It was October 24th, 1929. The sun hadn't even fully risen over Manhattan when crowds were already gathering outside the New York Stock Exchange. Men in ties, desperate housewives, teary-eyed young brokers. Everyone was searching for an answer to the same question. Has the world, as we know it, ended? Inside, the noise of trading mingled with desperation. Papers were torn, phones rang incessantly, and each drop in stock prices was like a razor blade cutting through the confidence of an entire nation. It would be remembered forever as the beginning of the greatest economic crisis in modern history. The Roaring Twenties. But to understand this collapse, we need to go back a few years. The United States of the 1920s was known as the Roaring Twenties. Years of optimism, jazz, fast cars, and rampant consumption. World War I had ended. American industry was thriving, and the stock market seemed like an endless ladder to wealth. Radio brought music and advertising to every home. Skyscrapers were rising in New York and Chicago, and it seemed nothing could stop the march of progress. Thousands of families who had never invested before began buying stocks. After all, it was the new American craze, getting rich with the stock market. Easy credit and leverage. There was just one catch. This prosperity was being built on quicksand. Brokerages offered easy credit, so anyone could buy stocks on credit. With just 10% of the value in hand, a common investor could control entire stocks. It was called buying on margin. The problem was that when prices fell, the investor had to immediately cover the difference. If they couldn't, they lost everything. It was a time bomb hidden at the heart of the financial system. And with millions of people leveraged, it only took one click for everything to collapse. Black Thursday, October 24th, 1929. This explosion occurred on October 24th, 1929. Selling began early and, like an avalanche, dragged prices down. The stock exchange corridors became the stage for a chaotic spectacle. Investors screaming, brokers sweating, phones ringing non-stop. The newspapers would call that day Black Thursday. Major banks tried to intervene, buying millions in shares to contain the panic. But fear had already spread to the streets, cafes, and radios. And when fear enters the market, not even the giants can contain it. Black Monday and Tuesday. If Black Thursday was the beginning, October 28th and 29th would be the brutal end. Dubbed Black Monday and Black Tuesday, these 2 days plunged America into chaos. Stocks plummeted like never before. More than $30 billion evaporated in just 48 hours, an amount equivalent to almost the entire federal budget at the time. Brokers abandoned their desks, men wept in the middle of the trading floor, and the entire country realized this wasn't just a market correction. It was a collapse. Domino effect in banks. From then on, the domino effect began. Small banks, which had lent money to ordinary investors, began to fail. And when a bank failed, panic spread. Bank runs broke out across the country. People formed huge lines to withdraw their savings before it was too late. But with each withdrawal, the situation worsened. Thousands of banks closed their doors forever. Families who had saved money for decades saw it all disappear overnight. Real economy feels the impact. The financial collapse soon spread to the real economy. Industries ground to a halt, factories closed, and machines fell silent. Ford laid off tens of thousands of workers, steel mills reduced shifts, and the country that had once produced at a frenetic pace plunged into paralysis. The crisis was no longer just a number in the Wall Street papers. It was hunger at the table. It was silence in the factories. It was the feeling that the future had been stolen. Mass unemployment. At the height of the Great Depression, More than 15 million Americans were out of work, about a quarter of the workforce. Entire cities saw endless lines at soup kitchens and shelters. Men in worn suits, crumpled hats, and vacant looks waited for a bowl of soup or a loaf of bread. Entire families made makeshift homes out of wood and cardboard called Hoovervilles, a reference to President Herbert Hoover, who was accused of doing nothing in the face of the tragedy. Human stories. Among these millions, there were stories that encapsulated the collective pain. A Kansas farmer who lost his land to the bank. A Detroit factory worker who went from producing cars to relying on charity. A Chicago teacher who, overnight, saw her salary evaporate along with her school budget. The Great Depression didn't differentiate between rich and poor. It affected everyone. And every face in the hunger lines was a reminder that the market isn't just numbers. It's the real lives of ordinary people. Government response. The government was slow to act. President Hoover believed the market would correct itself. But in 1933, when Franklin D. Roosevelt assumed the presidency, a new era began. Roosevelt launched the New Deal, a set of programs that sought to restore confidence, public works, job creation, and support for farmers. Posters bearing the WPA symbol began to appear on highways, schools, and bridges. It was an attempt to rebuild not only the economy, but also hope. Regulation is born. From this pain, structural changes also emerged. The government realized that the market could no longer be a lawless land. In 1934, the Securities and Exchange Commission, SEC, was created, responsible for overseeing and ensuring transparency on the stock exchanges. Reports became mandatory, audits became routine, and ordinary investors gained protection that had previously been lacking. This was the beginning of modern regulation of the American market. Glass-Steagall, separating banks. Another harsh lesson was the Glass-Steagall Act, passed in 1933. This law separated commercial banks from investment banks, preventing household savings from being risked by wild Wall Street speculation. It was a barrier against the rampant greed that had characterized the 1920s. And for decades, this separation kept the financial system more stable, until it was partially repealed at the end of the 20th century, paving the way for new crises. Eternal lessons. The Great Depression taught us lessons that endure through time. The danger of uncontrolled leverage, the devastating effect of collective euphoria, the fragility of unsafe banking systems. History shows that crises don't just emerge from nowhere. They build little by little, fueled by greed, silence, and overconfidence. And when they explode, they don't just destroy fortunes, they destroy dreams, families, and entire societies. Almost a century later, the question Americans asked in 1929 still echoes. Can it happen again? The answer is yes, because greed has cycles, and human memory is short. But another truth also resonates. From pain can grow stronger structures, and from crisis can spring renewal. The Great Depression shaped modern America, teaching us that there is no sustainable growth without responsibility. And every time we look at the columns of the New York Stock Exchange, we must remember they are not just stones or marble. They are testament to the fact that the market can build empires or tear them down in a matter of days. If you enjoyed this story and want to follow other remarkable narratives from the financial market, subscribe to the channel now and activate the bell. That way, you won't miss the next episodes, where we will reveal more secrets, lessons, and real stories that shaped and still shape the world of finance.